Hey, Elliot, you know how I know that we're almost at a peak on the stock market?
How, David?
Because we're seeing stupid-ass TikToks.
Hey.
We're seeing stupid-ass TikToks, stupid-ass Instagram stories, stupid-ass tweets coming out on bad investing advice.
Okay, everybody wants to get involved, huh?
Yeah, yep. It's not even that people want to get involved, because that's fine if you want to get involved. People want to scam, because right now people are really excited about what's going on in the market. And so now we're seeing the scammers and the grifters coming out.
So on today's episode, scammers and grifters.
From flankinvesting.com, this is Money Grooves, the show for intelligent investors. I'm David. I've been investing for over 10 years.
My name's Elliot. I'm an amateur investor.
And today's episode, stupid-ass TikTok videos about investing.
Oh, finally, something I'm familiar with. Short-form video content.
Let's go. All right, let's play our first one.
You better pay attention. This could be life-changing money for you. After making $14,000 this month, I've got a ton of buying power, so of course I'm going to be putting that into new stocks. Finally narrowed down another very...
That sounds pretty good. 1,000% return. He's got $164,000 involved, 9% in the last whatever month. I can't see what his time scale is. Oh, past month. Yeah, this guy definitely is going to give us a lot of insights about the business that he's buying.
This teenager's crushing it.
This teenager, hey, good on him for making content and getting involved early. But it is about to take a side turn that I don't like.
Last time I made a video like this, the stock ended up already going up 200% from my entry. And I made over 500 people huge returns that are not possible with the S&P 500.
Whoa, so he's going to make us huge returns if we just buy the stock that he's talking about. And it's Rick Tech Robotics. Have you ever heard of that?
Nope.
Why the hell would you buy something you don't know anything about?
Save this video, you're going to need it, and share it to friends and family because I always put you on for free. You might as well do the same for them. This one's car themed. You guys know I love...
Ooh, it's car themed. So we're definitely going to hear more about the underlying business and how this company is about to have a huge stocks pop, right? Because stocks just don't pop for no reason.
Right. I love cars. I can't wait.
C7 Corvette here, but I genuinely believe I could buy another one of my dream cars with the profits I make from this one. This is SESAI, which is already up over 20% this week alone, because the market has now realized how...
Wait, we're no longer talking about cars now? We're talking about SESAI? Have you heard of SESAI?
Nope.
I'm putting my life savings into it.
How incredibly undervalued they are compared to where they should be. Bought in last week just so that Robinhood would alert me in case it went lower so I could actually buy heavily. It's already up significantly from them, so I am getting some FOMO, but it's okay. I'm not going to buy till the next pullback. Let me show you guys why I'm getting ready to buy and how much I expect to make. First of all, this year alone, they're expected to climb another 56% to reach $2 per share. You might be thinking that's a lot for this.
Okay, that's him just looking at analyst expectations.
Yeah.
Do you know who else knows everything about analyst expectations?
Who?
The entire market. Everyone knows what Wall Street, literally everyone knows what analyst expectations are. The question is, do you think the company will beat those expectations or not?
Yeah.
Based off your own lived experiences and your own understanding of the company or whatever the hell it is that you're buying.
Yeah.
Lot for this company. They've been in a significant downtrend. They are well below their IPO price of $10.50. And now might be one of the best times to start a position historically because they've consistently been growing their EPS. So we want to be in before they go from unprofitable to...
Okay, that's not consistently growing EPS. We got to jump over to Flank. Okay, this is how you actually research a company. Or you see if you want to research a company. Right. SES AI Core. They are responsible for the production of high-performance lithium metal rechargeable battery technology for EVs and other applications. Okay, I'm actually a little bit interested in that. That's
right.
I drive an electric vehicle.
Yeah.
Yeah, let me hear more about this. Went public in 2021, and they make batteries for urban air mobility. That scares me because that's not going to be a big thing anytime soon. EVs, okay, I like that, but EVs have pulled back. Drones, robotics. All right, like this could be a real company. Let's look at some. Oh my God, look at how unprofitable they are. They lost $100 million.
Oh my gosh.
Also, none of this was prepared for or anything. This is literally us looking at this company for the first time. Revenue is going nicely, but I mean, this is a penny stock. They made $11 million.
Yeah.
Like that's not a big company.
Right. Right.
Book value is going down. Return on invested capital. You want to see if it's a good investment?
Yikes.
ROIC is your key indicator to see is if it's a good investment. So far, it is not a good investment.
Yeah.
Free cash flow is negative, getting more negative. Shares outstanding, they're diluting the absolute crap out of people. Look at that. They had there were 34 million pieces of pizza in this pie.
Yeah.
and now there are 347 million. This could have been the IPO. I have to look at, understand more. But that when I see something like that, I really need to understand.
Because now my piece of pizza is worth way less.
Yeah, and they're still diluting. They
Wow.
diluted 3% in the last year. So that's not even counting this big ass jump. So
BAG in the industry term. BAJ. Oh shit. BAJ.
all right, but anyway, let's go back to our friend. Oh, now we're on a new company.
Oh, new company. SoFi. Oh yeah, SoFi. Everybody loves to talk about SoFi.
Yeah. Okay, I'm going to cut it there. But you can see the problem there. He told us nothing about the business. I understand it's a short form content. You can't package everything in there. But don't lead saying this is 1,000% return.
Right.
And not say anything else about the business.
Yeah.
Say what you want to say. I'm a full believer in the First Amendment.
Right.
But the fact that this is the majority of financial content on social media is freaking bonkers.
Yeah. And for me, as a new investor, I see this kind of stuff and I have really no idea what's good and what's bad, right? Common sense. I'm like, well, maybe I will do my own research. Maybe I won't take advice just from one person I've literally never seen before. But I don't have the same kind of reactions you do to these kind of things. So I'm glad we're talking about this because I think this truly is very valuable content for folks who maybe are not as well versed as you are in this stuff.
Yeah, I mean, I'm not an expert. I don't know the future or anything like that, but I like studying companies. Right. So, and I have my own way of investing, right? I'm a Buffett-style investor.
Yeah.
There's plenty of different strategies, but no one explains whatever strategy they're doing. He just said stock's going up 1,000%.
Buy.
Because analysts' expectations are 50% upside.
Yeah.
Okay, even if analysts' expectations are 50% to the upside, where does that 1,000% come from?
Yeah. Right.
It doesn't.
Right.
I don't mean to poop on that young gentleman. I think he's like an 18-year-old or something like that. So I want to be mindful that he's still learning how to invest. Hopefully he's still learning how to invest. Hopefully he's not making too much money off of his audience.
Yeah.
So I haven't looked into him. I don't remember his name, but it's good to study. It's not good to scam people. If he is. Okay, let's go to the next one.
Okay.
September 26th, and these are the 5 penny stocks that are on my watch list for a quick swing trade today. And as always, I have
a quick swing trade today.
Here we go.
Today.
Quick swing trade within the day.
Yeah, look, thank God he's using the word trading and not investing.
Right.
I have to put the disclaimer that these penny stocks are only meant for a quick swing trade. These are by no means a long-term hold, and you should set a sell order 5 to 10% higher than your entry point. In addition, it's
not a long-term hold. You should set a automatic sell 5 to 10% above what you buy it at. You're gonna cut your if it does what you think it's gonna do for whatever reason you think it's gonna do, but then as soon as it starts to perform, you're gonna sell it right away.
Yeah.
He said he's trading, so that's fair that he's trading.
Yep.
But why is the stock gonna go up?
Yeah.
What's happening to the underlying business?
Right. Should I keep it for longer? Maybe it'll go up even more.
Yeah.
In addition, you should set a stop loss 5 to 10% below your entry point in case any of these stocks do suddenly.
If you set your sell price at 5 to 10% lower, no one has any idea what a stock's going to do in the next 24 hours.
Yeah.
No one.
Right.
If you set a sell to 5 to 10% lower, there's a high chance that that's what you're going to sell at because markets swing for whatever reason, for a literal infinite amount of reasons.
Drop. But we begin with one of my favorites, hyperscale data, ticker symbol GPUS, which is already up 22.72% today. Next up, we have ticker symbol GUTS, which is up 17.82% in pre-market trading. Following that, we have ticker symbol MIGI, which is up 11.43%.
Just golden. Any ticker with PUS in it, and then the next one is GUTS.
Yeah, they're not real companies.
Gold.
And he said that they're penny stocks. Ellie, do you know what a penny stock is?
I mean, I think I have a concept of what it is. They're really cheap stocks that you buy in mass quantities, hoping that they'll have some performance that you can sell.
Have you ever seen The Wolf of Wall Street?
I have.
So the Wolf of Wall Street, what he was doing was he was calling regular people like you and me, cold calling them, and saying, "I got this hot stock. You gotta buy it. You gotta buy it. There's gonna be this, there's gonna be flying cars. I got a flying car company. You gotta buy it. I'm telling you." And he would sell the stock on the people.
Yeah,
they would buy it. It would raise the price, and then the Wolf of Wall Street would sell it before it crashed, and that's how he made millions.
Wow.
And this penny stocks are just stay away from them. It doesn't they're not real. Majority of them are not real companies. They trade on the OTC markets, which have really, really lax regulatory requirements. So you don't even know if you're reading the financial statements, if it's real or not.
Sure.
So yeah, just bad. That's really the big thing about his that just I didn't like about his story.
The
It
penny
was
stocks,
just saying set a stop loss have a stop loss, and then also if it goes 5-10%, also automatically sell. That just didn't make sense to me.
Sure.
Okay, this next one's actually insane. So this comes from Reddit. And this person said, I took out a $50,000 loan, personal loan, hoping I could double or triple it. Probably because he saw the 1,000% return video or, pay off the debt and still have plenty left. Instead, I ended up losing it all. That's what happens when you do this.
Wow.
The most painful part is I actually had some amazing positions that would have actually tripled my money or even more, but I sold too early and held on to the losing trades. Now I'm sitting on $50,000 of debt, feeling devastated. What do you all think I should do next? Is there a chance I could recover, or should I just quit trading? Quit trading. Quit trading. Quit trading. Quit trading. Also, quit using margin. Don't use margin. Do not use margin. Was that clear enough?
I think I got it. Stop trading.
Yeah. Also, as a Robinhood shareholder, that's how they make a lot of money off of selling margin trades.
Right.
I still don't think people should do it. It's dumb. Do not risk what you have for what you don't need.
Yeah.
You do not need to have these crazy returns. Play the long game. It's get rich in 20 years. It's the only way to do it. It's the only way. Unless you just want to gamble.
Yeah.
And maybe you're lucky. You're probably not, because you got a lot of really smart people on Wall Street who are betting against you and know a lot more and have access to a lot more data.
Right.
And he just gave us we got his screenshot from that. And that just sucks, right?
Yeah,
I actually do feel bad for I don't know anything about this guy, but I don't like to see this. I'm literally building a company to stop this.
Right. Right.
All right. Next one. All right, this one. So, someone said, I purchased shares of Robinhood at $17. They're now trading at $136. Do I buy, sell, or hold them? That's a very legitimate question, and congratulations, dividend holder. The answer is, well, what do you think the intrinsic value of the company is? What do you think the value of Robinhood is? And if you think that it's significantly higher than it is today, given a margin of safety, then you don't sell. You hold on to it, or you buy more. When you sell is when you think it's fully valued. When it's reached what you think it's worth, then you take your profits, or you reassess your thesis. Is it did you forget something? Is there a new growth area?
Yeah.
And then that's how you make your decision. But then this person's response just made me lose it. Hold until a position exceeds 5% of my net worth, then sell 20%. Repeat as needed. I used to sell half, but discovered I was cutting my gains short too much. There's a perfect metaphor for this, and it's a Buffett quote, of course. This is called cutting your flowers and watering your weeds. Like you don't when you finally get a company that's doing what you think it would do and growing the way that you'd expect it to.
Right.
You hang on to it, and who cares if it grows to be a large percent? If you need liquidity or you need the capital for something else, or you see a new opportunity, look at selling if you want.
Right.
But don't set a rule that as soon as something starts to grow, you sell 20% of it.
Chances are it's going to keep going. I mean, at least a little bit.
It depends. It depends on what the business is. Did you do your homework? Do you understand what you bought? And if I bought Kava, the restaurant, which I'm looking at, if I bought that and it started doing well, I would look at, all right, how many more stores are they opening? How are same store sales going? What's the business doing? And I would make my decision off of that. If I saw that there was, consumer tastes were shifting and Mediterranean cuisine isn't going to be the new Chipotle, then I would sell. I would be like, oh, thank goodness I can still take a profit.
I'm out.
Yeah. And then this last one kind of stinks.
Yeah. It's a stinker.
Going to be cashing out my entire retirement. I recently discovered, which I should have researched earlier, that my retirement is doing really well because 16% of my mutual funds are invested in BlackRock, and it doesn't sit well with me, and I don't believe in this system anymore anyway.
This one stinks for a lot of reasons.
Yeah.
First off, if you don't believe in BlackRock, that's that's awesome. Like, you don't,
Right.
yeah, there's tons of index funds that are not managed by BlackRock,
Yeah.
and you can buy and sell around that. Now I would want to ask her which mutual fund specifically was she holding, because she said that 16% or whatever is invested in BlackRock.
Yeah.
I don't think that was the case. I think there's a large conspiracy on the internet that like BlackRock owns the majority of all companies. It's not. They're the largest mutual fund and ETF and provider in the world.
Yeah.
And so they have those positions in companies because they're selling the mutual funds.
Yeah.
So whenever you look at the company ownership for any company, you'll see BlackRock, you'll see Jane Street, you'll see a bunch of other like ETF providers at the top of the list because
Interesting.
it's ETFs.
Right.
It's mutual funds.
Yeah.
So I think her premise was probably, even after saying she should have researched it more, I still think she's lost and didn't quite understand, because it'd be weird to have that concentrated of a retirement fund in one stock.
Yeah.
And then the second part is she's losing faith in the system, and that sucks.
Yeah.
And I actually I understand. Like
Yeah.
it just sucks to see someone at 32, which is close to my age, like losing faith in the system.
It's too bad too, because I mean, retirement funds are important and things are going well right now. So cashing out now is not something I would do.
You never want to cash out.
Right, you never want to cash out until you actually have to use it. So I would never cash out just generally myself. But if I was going to, now would not be the time.
Yeah, absolutely. Yeah. I actually am a net seller right now because we're at all-time highs, and I need the liquidity to fund Flank.
Yeah.
So I've been selling more than I normally would, and it's a great time to sell right now because
Yeah.
we're at all-time highs.
Yeah.
I get weird at all-time highs, man. I'm like uncomfortable. When you'll see me smiling a lot more when the market's down 10%. That's just that I just feel more comfortable. When it's at all-time highs, I just get skittish, you know. So yeah, I don't know what she plans to do, but that was kind of the end. That was pretty much the end of the video. Is that she doesn't. That was the main point. Is she's lost faith in the system, and so yeah, that just stinks.
Yeah,
yeah,
it stinks.
There's for every, you got to think about yourself 50 years from now. We
Right.
all, no matter what your political beliefs are, we're all part of the capitalistic system.
Right.
We are voters, and we can make it. Capitalism, it's a touchy, it's a subject on its own.
Yeah.
But regardless, we're all stuck in this game.
Yeah. Right.
And as voters, we have a lot of control that's available to us. We have we have our vote, which is the most sacred thing we can do.
Right.
And that's where we should be waging war, is at the polls, and not with our retirement.
Not with our
accounts.
retirement funds.
Yeah.
Yeah.
All right, I just got to take a stab at traders. One more.
Okay, one more. All right, let's hear it.
All right, this one. This is the best setup in the stock market. MSTR, which is MicroStrategy, which we made a video on if you want to check it out. We'll link to it at the end. Every single time we've reached the weekly 50-day moving average since May of 2023, we have bounced much, much higher. My price target on Master is $400, then much higher. Like for my entry alert for a swing.
You gotta like it, David.
I did not like
Gotta
it.
smash that like button.
Okay. Elliot, what does this tell you about a stock or about a business?
The swings are weird. I'd prefer to see something more linear.
It
than
tells
this.
you literally nothing. Now, traders would say, 50-day moving averages, 200-day moving averages, whatever, iron condors. Like I've read books on that, on options trading and just trading in general.
Yeah.
It's reading the tea leaves. If you just want to read unless you are a quant, if you have a PhD in mathematics and you have access to a Bloomberg terminal, let me say it again. Unless you have a team of quants and access to multiple Bloomberg terminals, this kind of stuff, you're going to get your ass handed to you.
Yeah, sure.
It's not real. You're gambling. Just go bet on red. It's more fun. And a nice lady or a nice man will come give you a free drink. This literally tells you nothing about the company. I've studied MicroStrategy. It's a Bitcoin treasury company. It was a shitty 90s software company that repivoted because of Michael Saylor into just holding Bitcoin as a treasury.
Oh, interesting.
The stock's done really well because Bitcoin has gone up.
Yeah.
But this has a 1-to-1 parallel on what Bitcoin is doing.
Huh.
There's no such thing as this 50-day moving average. You look at MicroStrategy's balance sheet, and it's all Bitcoin. So doesn't matter what this stock is doing, it will continue to trade exactly how Bitcoin trades.
So you might as well just invest in Bitcoin.
If you want, I mean, if you, like, yeah, but to try to say that, oh, we're set up for a nice bounce here because because of the 50-day moving average, it's nonsense.
Yeah.
It's going to trade based off the price of Bitcoin, and like if you actually, and the punchline there is if you understand the business, if you understand the company that you're investing in, then it makes this shit makes a lot more sense. It's way less confusing. Because, I mean, how many people do you know? How many people do you think knew that MicroStrategy is a Bitcoin treasury? And that's like, if you just read the first sentence of their annual report, they say, we are a Bitcoin treasury company.
Yeah, I mean, me for one, I learned right now that they're a Bitcoin strategy company.
Yeah. Part 1, Item 1, Business, MicroStrategy's annual report. Strategy, they renamed to Strategy, is the world's first and largest Bitcoin treasury company.
Wow.
So it's going. They hold Bitcoin. That's all it is.
Yeah.
And so it's just you got to understand what you're buying. You got to understand the underlying business.
Wow.
This stuff isn't that hard. You look around the world. You go, oh wow, a lot more people are. A lot more people are eating at Kava. I heard people just rave about Kava. I'm going to go to Kava and see if I like the food, and I'm going to see how busy it is in there, and I'm going to see how much it costs, and then I'm going to look at the business on Flank or however else you do your research. And then see if it's an actual buy or not. Look at the strategy. How many more stores are they planning on opening?
Yeah.
All this that's way more simple to me than saying, I'm going to find a 50-day moving average and I'm going to set up an iron condor and, head and shoulders pattern. And it doesn't make sense.
Okay, great. So for me today, what did I learn? I learned take the content you see on social media with a grain of salt. And as we know, always best to do your own research. And Flank is a perfect place to do that.
Yeah, it's definitely a place to get it. That's why Flink exists.
Yeah.
is to actually research the underlying business.
Yeah.
And you can access it for free. And just to really highlight on that last point you said, there was a Forbes report that came out saying that finfluencers. There's a new report out that 80% of the advice on TikTok is misleading.
Yeah, this is not a surprise to me.
Yep. So if you're gonna buy stocks, please do the research and be a patient investor, be a long-term investor. Look at the underlying business, buy businesses, don't trade stocks. And if you don't want to do any of that, if any of all that makes your eyes glaze over and the idea of, doing a little bit of homework just makes you want to, hurt yourself, just dollar cost average into low cost ETFs and hold on to it for life.
There you go.
That's A-okay. Hang on to it forever and you'll be fine.
All right. Yeah, and maybe save social media for videos of dogs and people slipping on ice.
Yeah, those are always the best.
Those are always
or babies
good.
eating lemons.
Oh, those are cute too.
Yeah.
I like those.
Yeah. That's all for today's episode. Thanks so much for watching. You'll see the video about MicroStrategy we made a long time ago over my shoulder right now. You should check it out if you're interested and you want to learn more about a company and not just worry about the 50-day moving average. Thanks again so much for watching. We'll see you in the next one.
Thanks, everybody.